Greetings and welcome once again to another session where we're going to be giving an update as to our account balance and standing. So today is the 26th day of October 2025. So we're making progress on the way to showing you that you can use one stock to reach $1 million. All right, so we're just in the first innings, so we started with different values. So if you want to know how we actually started, then you can look at this video that will be linked right above for your listening and viewing pleasure. So now let us initiate the recording sequence so that I can give you a display as to what is taking place in our account since the last time we had our encounter. And with that said, our recording session has been initiated. So now let us get into the meat of the matter of the meat that you came to devour. But before we get into the meat of the matter, I just want to bring your attention that sometimes I've heard people saying that when they're in a position and the position is at a loss, they would normally add to their losers. But there is a problem with adding to your losers. In this system that we have operating in, we want to ensure that our losses are kept to the mere minimum. So we want to minimize our losses but magnify our gains. That way, at the end of the day, we can have more gains than losses. So the concept of adding to your losers, especially if you are new to this system of operation, I would advise against such. Unless you have a conviction that is unquestionable and you're willing to lose everything that you invest into that particular position. If that is the case, then adding to your loser may be an option. But for me, I have found that adding to the losers make the loser a bigger loser than it needed to be. What you need to do is to respect your stop loss, respect your investment thesis, and respect your position sizing. When you respect all of those aspects, you will have respect for risk management. And in having respect for your risk management, guess what? You will be one of the few successful traders, because majority of the traders are unsuccessful because they don't respect their stop losses. Now, when we have winners, it is okay to add to your winners. If the thesis is consistent and you have found a winner and the winner has proven faithful, then you can continue to add to it. If the winner starts to change its directionality and trajectory, then you can consider to close out that position and get into another position. So with that said, I want you to bear that in mind as you will understand further how we'll be approaching things as we increase our account. Another thing I want you to understand is that sometimes you have a good stock, you have a good thesis, however, you are too late. And if you are too late, then that means that the party would have missed you. But for us, what happens most time is that we are too early. And when you are too early, you are right, but you are wrong. You are right with your thesis, but you are wrong with your timing. And in this game, timing is everything. I hope that this will give you some guide as to how we go about positioning ourselves in order to get the best result. You don't have to be a IQ elevated individual, IQ 150, IQ 160. You don't have to have an high IQ. all you need is just the basic computation of addition, subtraction, understanding positive and negative, understanding profits and loss, and then understanding break even. It's simple concepts like those. Once you understand that, then you can become successful in this area. And remember, if they can feed you, they can starve you. I don't want you to be dependent exclusively on any one individual or any one company to be putting food on your table. So that is why I'm teaching you this skill, so that you can, even if you're a lazy investor like myself, you can put your money to work, let it sit, and then you reap the benefits thereafter. I don't believe in investing in index funds and in mutual funds and those kind of things. I don't believe in that for my investment style. It's not that it's bad, but it based on the aggressive nature of my investment style. Even though I'm lazy, I don't want to engage in those returns. However, if that is the only option that is available to me, then that is a good start to get your feet wet. I don't believe in paying unnecessary fees, and there is an expense ratio that has to be considered when investing in index fund and other ETFs and all these kind of entities, the financial metrics, financial instruments that are designed to capture your money. So this is what you have to understand. When you invest in these funds, whether it makes money or it loses money, the expense ratio is calculated daily. So at the end of the year, you will be paying money on your actual gains and also on your unrealized gains, which is bonkers if you ask me. But many persons who are financially illiterate or who are just financially irresponsible, when they have the knowledge, they engage in these practices. Yes, sometimes if you don't want to manage your money, you can give it to someone to manage. But why would you have $10 billion and give someone a 1% fee just to manage that money? If you could have climbed to that level by yourself, I think that the best person to give the money to manage is someone that you can trust, someone who is not benefiting when you are losing. And that is a problem that I have with those kind of funding. If I want to think about taking 50 stocks or 50 instruments, I think that the best thing that I could do is to take those 50 by myself. But many persons think that, hey, this is not such a big deal. It's 0.5%. Yes, 0.5% adds up. Because at the end of the day, if you have $1 million, 0.5%, that can take you close to about 10,000. If you have over a period of time, if you have $1 million and the expense ratio is at 1.5%, that can take you to losing about 660,000 over a 20-year period. You can fact check me on that, or you can get the correct number if you are not sure if what I'm saying is actually accurate. All right. So just put it in a expense calculator and see how much you will lose in actual increase if you have your money sitting there and the instrument is making money, losing money, making money, losing money. So whether they win or they lose, they still make money. But you are the one who is bearing all the burden and all the risk. They're just managing your money. I know that this may seem like a steal of a deal for persons, so some persons, but not for everyone. No, let's get into our account status and you can have a visual as to where we are. We're going to pull up one of our favorite accounts, the Webull account, and the links to the accounts that I'm using are listed below. And now it's saying that we have access to different trading. So these are the positions that we have. Let us check how the account did this week. So this week our total value of the account is now $14,403.51. And you remember that before it was about 8,000 last week. So this is how the account value can fluctuate. And we still have cash that is undeployed that we need to deploy. We have 2,500 that is needed to be deployed, but we wanted to deploy it in SoFi because that's the one stock that we are going to be using to demonstrate that you can make $1 million with one stock, having your right entry and having your right exit. So if you follow us closely, you will see that majority of our positions are currently showing an increase, and our positions are at high of 612% return, and we are only probably about less than 6 months in to this account, and as low as 27%, no, 12% return. All right, so that there is just something for you to consider what is possible in these markets. And the more money you have, the less work you have to do to get the amount of returns that we are actually working to get. If you had $10 million sitting down and you are getting these kind of returns, think about how your account would look. Your account would look phenomenal. You could probably even stop working right now if you don't want to work. But most of the persons who follow us, who are participants in this system, they actually desire to work as a regular person, and there's no problem with that. If you are in a financial bind, a financial state in which you are lacking in this season, there is no problem, there is no foul in getting a job. There is no foul in getting a job. If you need to get yourself back on track, get a job. You can start wherever you are. If you are even 50 years old, you are not too far from becoming a millionaire to be able to retire in peace and tranquility. And that is what I want to help my viewership to understand. 10 years, you can retire with $1 million in the bank. But if you have a wife, then we have to work a little bit more aggressive for the next 10 years, because by you're 50 now, by 60, I want you to be in a position where you can retire. If you are 30 years, you'll be able to retire many times over, because we're going to be getting you to $1 million starting from zero all the way to $1 million in 5 years. So think about the amount of times 5 and 5, 10. So every 10 years, if you just start over with us, 30, 35, 40, 45, 50, 55, 60, 65, and if you even want to go to 70, then you'll be able to have that increase. Now let us show you the position that we had open. The position that we had open is not currently there because we closed it. We wanted to get SoFi at $36, and we wanted that uh, at $10 per contract. But the contract has now moved to $50, so we are going to have to reposition ourselves. And this was just an earnings play. The real truth is I don't really play earnings, so there is no real urgency for me to play earnings at this juncture. It would have been a good position to enter in if the price had been met. But based on the trajectory, we would have missed that boat, and we are not going to be chasing. All right. Next year in 2026, I am going to show you how you can trade your way from $1,000, maybe even $10,000, all the way to $1 million. And that there is going to be fun and exciting. We may even reach $1 million before our other accounts. So you just have to just bear that in mind, that we're going to be taking on that uh, task and show you that it is possible. And then you're going to say, why was I not introduced to this when I was in school? Why was no one talking about it? Many persons keep certain things discreet, to keep it a secret. But when you find it, you can now teach your family, you can teach the young, you can teach persons who desire to learn, so that you all can benefit from the increase that is possible. So now you're looking at our calendar and seeing that we have been up and down for this month so far. So this is as transparent as anyone will present it, and we want to just be absolutely exclusively transparent, so as you can have an appreciation for what is actually taking place in our account. So for the year, you can see that there are some months that we had $0.0004 in January. We lost $50 in February. We didn't do anything in March, April, and in May we lost $92. In June we made $400. In July, $770. August, $762. September we lost $32. You keep your losses as small as possible when you understand what you're doing. October we are just up about $1,133.86. So this is our profit and loss chart for this month. Let us look. This is the year 2025. All right, let us go into our month and let us look at last month. How did we do last month? Last month it shows you on the days, Tuesdays and Wednesdays were the days that we lost money or our account had a drawdown. But on Thursdays and Fridays it seems to have been positive, and on Mondays it was positive mostly. All right, so based on how your account performs on the different days, you can know when it is that you should trade, or when it is that the market is likely to go up, and when it is that the market is likely to go down, with a little bit more accuracy than others, based on the companies that you're investing in and based on your trading style. All right, so it all depends. This is personal finance. So personal finance is personal, which means that you may have a style, your father may have a style, your brother may have a style, your sister may have a style, your mother may have a style. All of you are in from the same family, but you have different style. There is not one way to skin the cat. The cat can be skinned in many different ways. So there's not one way in the market to make money. Right now we're just using options and stocks when we're assigned, but others can use futures. I have an account that has futures, that I do trade futures from time to time, and that there has been a learning curve as well. But futures are good to trade, and you don't need a minimum balance in order to make your account multiply. You can multiply your account quickly. So you can also lose money very quickly, and in futures you don't have time decay. So that there's something that as we grow together, I will teach you everything that I know that I think would be beneficial to you to understand, so as you can position yourself in the best way possible for success. I am a teacher at heart, and I've never had a student that I have taught that has actually failed my course. So when I'm in the classroom, I have been an educator, even at the college level, and I have never had a student who has failed my course. So, and the courses that I teach are more scientifically related and complex in nature, because you make a mistake, people die. So we have to be very strategic in how we deploy the information. We have to ensure that the students understand not only the theoretical information, but they also understand the practical application, and they are astute enough to be exercise their dexterity in the performance of such. So I have some experience in educating, and I am here for you to educate you as best as is possible, because we all will grow together. All right, so that there is just an update as to our account in this area, and this is the individual account. Let us go into the Roth account. So in this Roth account, we had deposited a total of 6,000, if my memory serves me right. Let me check that out. So we deposited 5,000 and 1,000. That's 6,000 we deposited in this account. We're going to deposit the next 1,000 sometime maybe at the end of the year, and then we're going to put another 7,000 into this account, and from this account I'm going to teach you how you can trade in and out of position with that 7,000 that we will be putting at the start of January, maybe January 1st, we'll be putting in another 7,000 and we'll be trading with that 7,000. So this account will be moving up more fluidly than the standard accounts that we have. So that there is just something that you can consider. And for crypto, I have let me check my crypto profit and loss. I have lost more money on crypto in terms of percentage wise than stocks, than options, than futures. So this year I think I may have placed in $100 in this crypto, and this is where my account has been going. It has been going down, down, down. So all time it says that cumulatively, because I took some profit, I'm down $19.30. It may look small, but this is very significant because the last time I put money in was about maybe 6 months or a year ago. I'm down $67 on that money that I put in, that I've been just putting $100 into this account, and I'm down. All right, but I don't really fool around crypto because I don't have the understanding totally to grasp the nuances that exist. And if I'm going to invest in crypto, I'm just going to go into Bitcoin, Ethereum, and there's another coin that I know of. There's Litecoin and there is XRP. So those would be the ones that I would consider first to go into before I get into any of the smaller meme coins, even though they have a lot of potential. But I would have to understand it before I get into it. But because I don't have the understanding that makes me comfortable to invest any substantial capital in it, then I'll just keep the coins that I have. I have about 3,642,061 coins. So the total invested is $109.40. All right. So that's the amount of coins that I have. I'm not sure of the utility of this instrument, but that is just something that we will have to explore. But that is not the priority right now. So if you're not understanding of this instrument, then you can leave it out. And for events trading, the events trading is connected to your individual account. So if we go back into our individual account and we go into our profit and loss, you can see that we lost money from events trading. We are down $94.62. And remember I told you why we stopped doing events trading? Because we thought events trading was more like gambling. Here you said it's going up, it's going down. How much is going up, how much is going down? Will it be in that range? And if you're right, you get the difference of $1. If you're wrong, you get the difference of $1, and that is just how it goes, right? So there is no real science to it. It's just a 50-50, and we discussed that it's not really a 50-50, it's a 40-40-20 split. So 40% probably goes to you, 40% goes to the other party, and 20% the host gets 20% from both sides. All right, so you may get if you win the other part, you get their money, which is that 40%. So you have an 80-20 split, and that 20 is going to the host, right? So the host wins under all circumstances. Whether you win, you lose, you draw, the host is going to win. All right, so that's just something that you need to bear in mind. So that there is the status of our individual account. We are 8,797. We are $8,079.72, right? And the Roth account is $6,285.77 cents. All right, beautiful. So all the position that we're in are done. I'm going to close this bull position. We're down 10%. I'm going to close it because this account I just want it to be for SoFi. So that's what I'm going to do for that account. I close up BMNR already. So this account is just my SoFi account, and I'm going to show you how I can use one stock and change the account standing from 1,000 all the way to $1 million, right? Now, let us get into our another favorite account, and that account is, let's see if we can pull it up, Moomooo. And the links to these accounts are in the description below. Feel free to get on the platform so I can show you exactly what we're doing and understand how things work. All right, so this is the account. This is saying upgrade and get. Let's see what it's saying. There's always some new information. Reward Moomooo membership upgrade enjoyment. Enjoy 12 months exclusive or 12 exclusive benefits, and these are the benefits that they want us to enjoy. Do they have a credit card? Tell me they have a credit card. Not yet. I'm not seeing where the credit card is, but they're making progress. So this account is beautiful. This account is currently at 7,000, well, $8,882.45. We have two sections of the account. We have the first section is where we had $1,000 and we just deployed all that $1,000 into one position. So we bought 10 contracts of a SoFi position for 2027, and we are currently up 591% on that position. Well, in the cash account, we deployed almost 1,000, not 1,000, maybe about $900. But the thing is, we put our money in different baskets, and by doing that, we basically what we call diversify. And in diversifying, we basically put our accounts at a disadvantage because we did not put it in one position so that we can have a field of view as to how it is increasing or decreasing. So that is something that I want you to consider. And we discussed that diversification is usually for persons who do not understand specifics. They just want to put everything in a pool so that's and mix it together, and then they get whatever comes from that homogeneity. But persons who are astute can get into one position and trade at one position, and they are even more successful than the persons who actually diversify. Because let us be realistic. You cannot trade 20, 30, 40, 50 stocks or 50 positions at a time. That there is going to be problematic, and that is going to be fatigue. So you have to just zoom in, find a good company. You can find many good companies because there are many good companies out there that you can possibly find. Because we have SoFi, we have APLD, we have BBAI, we have a lot of microcaps. We have Palantir. Palantir is still a good one. We have Nvidia, we have AMD, we have TSM, SM. We have so many different companies, but you have to just pick one, and then you just become a specialist in that one. When you're a specialist in one company, then you can move out into other companies, and there's no problem with that. I am of the opinion that persons who manage their account are more successful than persons who allow other persons to manage their account, especially when their account is not that large. All right, and the biggest problem that I want you to have is how you're going to spend the money that you have. That's the biggest problem that I want you to have. I don't want you to have a problem in which you're wondering who is robbing you. Why is this person making so much money off your money? And this person doesn't even have the capacity that you have, but they are spending the time that you don't want to spend on your account. So these are just some things that you have to bear in mind. Let's get back into Moomooo and see what's happening. So in the crypto section of Moomooo, I have not yet placed any funds in, but at the end of the year, maybe depend on how the taxation system is designed, then I may deploy some money into the crypto section. And I told you that the cryptos that I'm going to get into would be Ethereum or Bitcoin. Firstly, those would be first consideration, but I have to do more investigation before I venture into a crypto position. So this is just some information that I hope that was beneficial, and continue to be safe as you invest for now and for the future until we meet again. Be blessed and have yourself a money filled day. Hey, Nate.